So that brings me really nicely to our stock of the day, which is Pro Medicus. Now, I know we usually choose something that's in the news on the day, a material announcement on the day, but it was just too tempting to do Pro Medicus after its dramatic sell-off yesterday in the wake of its record result, I will say. Also continuing to be sold off today. Now, even other guests on the call always name drop Claude Walker in relation to Pro Medicus. If you don't know, if you're new to the program, Claude's been talking about Pro Medicus for a very long time, introduced it to a lot of people, has been a very big believer in the company's story. So I wonder, has anything changed? So we did see that share price hammered yesterday. Jefferies weighing in today saying first half underlying earnings were below consensus. Bell Potter, Citi, Macquarie, and Morgan still upbeat about its growth prospects going forward. Moelis and companies say that although Pro Medicus results missed expectations, the fundamentals remain intact, adding that AI will have less of an impact on the firm's growth compared to its peers. We spoke with the CEO of Pro Medicus, also founder, Dr. Sam Huppert, and he gave us his take on the share price slide. That it wasn't, in fairness, just today and yesterday. But I think shares are down about 60% over the past 6 months or so.
That full profit figure takes into account an unrealised profit on an investment. But if you strip that out, our net profit after tax rose circa around 30%. So that's without that particular investment, which clearly did increase the total profit. But without that, as I said, 30% growth in NPAT.
So that $10 million investment into 4D Medical.
All right, so that was us talking to Dr. Sam Huppert. He famously said that AI will not eat Pro Medicus's lunch. So let's find out what my guests think. Is now the time to buy Pro Medicus?
I knew that I was going to get a really blunt yes or no question like that. And the answer is definitely it depends, because and the reason I need to give that caveat is because I already own shares in Pro Medicus, right? So I bought shares many years ago at an average price of around $1, and then multiple times on the way up, I've called it a bought buy, and I have sold many times. I've also bought a fair few times, and I think probably the time on the show where I've called it a buy was years ago now, towards the beginning of the ausbiz journey. I was on with Rudy and we both called it a buy. It was $30-something at that stage. And that was the last time I was out there sort of saying like, it's a buy, clearly a buy. I was very enthusiastic buy then. Where I am right now is basically a little more nuanced. I already own shares in this stock, and given it's one of my larger holdings, I'm not going to go out and buy shares right now. However, if I did not own any shares in Pro Medicus right now, what I'd be thinking right now is that I want to buy shares in this stock during the current sentiment drawdown, because I basically think that the idea that artificial intelligence is going to damage the business of Pro Medicus is just wrong, and also shows flagrant ignorance about this business. And you would have to be a complete clown to think that artificial intelligence technology is a negative for Pro Medicus, when Pro Medicus has positioned itself for years to be the platform via which artificial intelligence companies access that market. So what Pro Medicus has a few different bits of software, but the most important bit of software is essentially the portal that a radiologist can use on their iPad, iPhone, or computer with their VR glasses, with Apple goggles or whatever they're called as well, to make diagnoses wherever they are, and much quicker than they could do using the competing portals, if you like. Now, Pro Medicus already has been for years working on having AI algorithms, or essentially AI products, AI technology on that platform.
Yeah, we've been talking about AI and PME for years.
For years, right? And the key point here is, why does a radiologist want AI? Well, the reason is because it's faster, right? It means that, yeah, maybe it's also better, but it also means they can just really quickly, the AI has already told them where the brain tumor is, and they just need to check it because we're still at the point where we want a human in the loop. Now, for Pro Medicus, if we reach a point where we no longer have humans in the loop, we're a long way from there for a start, but second of all, my guess is it will be Pro Medicus platform still processing the images. They charge on per scan basis. So I think that Pro Medicus already essentially charges on a per patient assessed basis. Yes, of course, right now that's a human assessing the patient's scans. And if that ever changes, which I think we're a very long way from having no human in the loop, but if and when that does change, Pro Medicus is in the prime position to be the company that's processing those scans without a human in the loop. And so I think that, point to me who's better positioned to do that. And so before we get to the point where there's no human in the loop, the actual gain of AI is making things faster. So it's not going to help a radiologist if they have to shut down Visage where they've been looking at their last few scans, and now they're going to use the AI thing to spot the brain tumor or assess it, and then they have to load up another program and get the scan in the other program and do all this. They would lose the benefit of first of all, Pro Medicus has AI too. So just say that there's an algorithm on Pro Medicus Visage that allows them to spot the tumor, and there's a competing one saying, hey, come to WiseTech just vibe coded this product.
Yeah.
Why don't you use them? They're going to use the Pro Medicus product that's right there. That's the time saving. It's on the platform they're using. It's like, it's like, why do you use Google Pay or Apple Pay? It's on the platform you're already using. So they're well positioned with this. And in my view, that will actually not be a negative for their business.
Okay, so you would, if you didn't have any, consider buying Pro Medicus.
Yeah, so the other bit of the nuance is their valuation is still probably just so it's maybe 90 times earnings right now we're talking about. So I've written an article where I discuss just some really back of the napkin valuation thinking around Pro Medicus to let people understand why I think it's just sort of in the beginning of the buy zone now. What I mean by that is if I didn't own any shares, I might nibble some fully knowing that most likely it's still going to go lower and lower and lower, but also knowing that if I buy some shares and then I notice it's down 50%, and then I might think, all right, I kind of thought it was a good price here, and now I think it's a really good price, so now I'm going to get my proper position. Yeah. And because you're never going to pick the exact bottom, so if I'm looking to buy a long-term, good quality company like Pro Medicus, I'm probably just going to have, once I think it's just on the edge there, I'll just have a little nibble, and then I'll prepare myself to buy more as it goes down. And if it doesn't go down and I never get a full position, well, so be it. That's what happens sometimes. And there are different ways to play it. So that's why I give that nuance. Because if you're like one and done, then I'd wait. Yeah. But if you're an accumulator like me, I think it's in the nibble zone.
Okay, all right. Would you be nibbling now?
I would, yeah. I think Claude summed it up really well, and that's how I think people should approach situations like this. I think too often when you have these sorts of panics in the market, people will try to anchor themselves to a specific dollar number or a specific valuation, and try to pick the bottom, as Claude said. Like, that's the price, and if it gets there, I'll buy it. Think about these things as a range, and if the price is starting to fall into that range where you would buy stocks, you would pick up some, and if it keeps falling, you pick up more, and if not, then obviously you've got some. Look, I mean, this is a brilliant business. It probably is the best business on the ASX. Out of every dollar they earn, 73 cents comes back into sort of operating profit margins. That's an absurd number. It will never trade. Like, if you're sitting there waiting for Pro Medicus to trade on 30 times earnings, it will never do that, because it's just simply too good of a business. In the past, it comes up a lot when I'm on with Claude, obviously, because people have the suggestion to Claude. I've sort of said in the past, I've always thought, rewind a year or two ago, 10 years, I think, was in the price, basically. Yeah. The market was pricing 10 years of growth. And I think rightfully so, because you can sort of model out 10 years of growth for Pro Medicus, just the contracts they earn. I think that's somewhere now back to about 3 or 4. And that's, to me, a very different proposition. And I agree, it's $13 billion. I run a micro small cap fund, so I'm not rushing out to buy Pro Medicus. But if you don't own this stock, and it's one that you sort of, wanted to own, we know how good this business is, that's a valuation where I don't think it's crazy excessive anymore. You know, I sort of look at that EBIT level, about 70 times. Growing at 30%, you're only talking about 3 years where that comes down to a level that's basically a market, rate for that sort of business. So, if I ask myself, do I think Pro Medicus is still a great business in 3 years, growing at these sorts of 20-30% rates? I think so.
Okay.
And so I agree. I think you're not buying it all at once, but I think nibble zone, or what do we call it? That's what I say.
Yeah,
as well.
that's fine. All right, we'll flow with that.